sauce. Yeah, I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Everybody, happy Wednesday. Welcome to the morning show. This is Stock Market TV. Spencer, JC, Steve, Alfonso with you as we are every single morning. We did just have a CPI print. Doesn't look like it was particularly hot. Maybe Steve has thoughts. I know JC does not have thoughts, cares more about what the market's reaction is and what the charts are saying. So without further ado, let's get to those charts. A new guest on the show today. I've been trying to get like at least 1 to 2 new guests on the show every single week. Today's guest is Chris Ciovacco. He'll be on the show at 9. He sent over quite a few charts, so very glad to talk to Chris today. We'll have mornings with Mary on at around 9:40, and that's what I got going on. Good morning, chat. Let's roll. Where is my intro? Come on now.
All right, folks. Strazza, I love that hat, by the way.
Thank you.
I really do. You are the Florida man.
I am the Florida man. Yeah.
You are the Florida man. All right, so I got something to say. So I got some text messages.
Mm-hmm.
Group chat yesterday, college buddies. Dear finance bros, is this meme stock thing for real and here to stay?
And what'd you say?
I can't respond to that. Come on. This is family. These are my brothers. What am I going to rip into them? I mean, I probably should have, right? Maybe I'll rip into them later this afternoon.
You can't say nothing.
Let me just say something. There's this thing about like, the last people to get in, they're the ones that get, screwed over. And, it always ends badly for the people who are last in. Good. That's the way it should be. Those that are selling to the suckers should be rewarded.
Yeah.
And paid handsomely for their timing. And those who are left holding the bag should get screwed. That's a good thing. Why do we have to pretend that we feel bad for the people who are the last ones into a trend? Why do we have to feel bad for them? That's the way the market works. That's a good thing.
I don't think anybody's feeling bad. I mean, listen, You're always going to have bag holders.
That's the way the market works. You want bag holders. You need bag holders. It is our job as investors to not be them. It's our job as investors and traders, whatever your time horizon is, to give our shares, our bags, hand those over to the bag holders. So people are like, oh, but crypto's bad because the people that are last in, they're like the poorest people and they get screwed over. Too bad. That's the way the market works. If you don't like it, you could take your ball and you could go home. Or you can stop crying about it and you can actually join with the big kids and do adult things and act like a real adult and understand that it is our job to make sure that someone else is the bag holder, not us. That's not a bad thing. It's a beautiful thing. It's a wonderful thing. Not only should that not be, spoken poorly of, it should be embraced and celebrated. It's a good thing. Just what I was thinking about.
How many people you think still own GameStop shares from this last craze?
From 3 years ago?
Yeah, just never sold.
I don't know, but I heard 5 times the actual float of GameStop is being borrowed right now.
Yeah, short interest is really going to increase a lot.
Steve, I would wager probably somewhere in the 5 figures, I would think.
5 figures of what?
Like tens of thousands of people?
It's impossible to quantify, right?
Yeah. I just
The point is, There are people who still own shares from this
Good.
last short squeeze.
Good. They deserved everything they got. Good.
They have bumper stickers too. They probably
Good.
still have those.
What?
Good.
Wait,
That's
by
a good thing.
deserve everything they got, you mean they got bailed out 3 years later? Is that what you're referring to?
I
You
mean,
can argue maybe, not really. Right? You can argue maybe, not really. Why don't we I just wanted to get that off my chest because this whole feeling bad for the bag holders, that's stupid. You're wasting your own time. Hit it, baby. Let's go. Let's talk markets. All right, guys, let's do a quick little morning rundown. Market is ripping this morning, just as Strazza has been telling you that this breakout is coming sooner than later. I have been on the more patient side. Strazza has been on the more aggressive side, which is why we have this debate. It's a beautiful thing. Dow futures are actually up 40 basis points. It's 160 points this morning for Dow futures. You've got S&P futures up 50 basis points. That's another 30 points. You got NASDAQ futures up 0.5%. That's 100 points on the NASDAQ futures. Russell 2000 leading the way this morning. How you doing? Up 1.2% for the Russell 2000. You got gold up 0.5%, just under 2,400. Silver up 1.5% above 29 as the rocks continue to dominate. Copper up 1%. Crude oil flat at 78. Natural gas up 2% at 240. You've got the dollar down pretty much across the board. Euro up, British pounds are up, Aussies up 0.5%. Bonds are ripping as rates are coming off. So dollar and rates coming off on the back of this CPI. And they were pretty much doing this before. And then just finishing up with a little funny money, and then we can get into it. Bitcoin up 3.5%, pushing 64,000 this morning. Ethereum trying to get back above that 3,000 level, up 2% on the day. And finally, Solana. I got my new setup here slowing me down. Solana is up almost 5% on the day, trying to get back above that 150. In total, crypto market cap, Spencer Israel, $2.25 trillion for cryptocurrencies.
did you do copper? Or did I miss
did.
copper? You did copper. Okay.
Bet your ass I did. Up almost a full percent on the day. New 52-week highs as we speak. Copper leading the rocks higher as we've gotten some digestion of gains in recent week in gold and silver. Copper has continued its relentless bid.
I like the way it got there too. These breakout candles, really nice.
Like going straight up, you mean?
And the last handful of candles have all been, pretty big green candles. So 5-day rate of change hasn't been this high since January 2023. Nice. You want to see a little momentum on a breakout, and you're getting it. You get an overbought momentum reading. RSI 14 has been pinged in overbought range since March. So it's a nice looking chart right now for copper.
Let's talk about small caps.
Yeah.
Let's talk about small caps. I've been pointing out that these are the worst and least relevant group of stocks on the planet, right?
Mm-hmm.
They essentially don't matter. You got a couple of stocks out there that are actually bigger than the entire Russell 2000. So these are by definition the worst and least relevant companies on the planet, and have certainly been struggling all year. What do you think it would suggest about the market if the small caps actually did something for once? Is there something that we should recognize from that sort of behavior if and when it comes, other than biotechs and regional banks are probably doing okay? Is there anything else that you'd take out of that?
Risk appetite.
You think so?
Yeah. They're crappy stocks.
But doesn't that get back to my earlier point that if biotechs and regional banks are doing well, that's evidence of risk appetite? Regional banks are some of the only financials that are not working. Seems like everything else in financials has been working, right? Capital markets, you got the big banks working, insurance.
I think it's coming, like now. I think
you've got over 200, over 10% of all of the Russell 2000 stocks are banks.
I think
Which
both
we can
of
sit
those.
here and argue all day long is probably too many, but I don't make the rules, right?
Listen, both of these groups, biotechs and banks that you're talking about, that the Russell 2000 really needs to participate for them to stick a breakout. They're trading with interest rates.
Remember when, and we'll talk about it in a meeting today. We have our team meeting at 11 o'clock every Wednesday. So I look forward to that. One of the things I want to talk about, Fonz, bring it up if I forget, is to do, remember when biotechs were like flirting with a breakout, but we just weren't getting the participation, remember?
Yep.
And the index itself was looking a little potentially flirting with a breakout, but like we just weren't seeing it in any of the stocks. Let's run that back for both regionals and biotechs, because I could definitely talk about some regionals and some super regionals that continue to act well and are pushing up against those levels. So let's have a breadth and participation conversation about regionals and biotech specifically. And then also, what's number 3? What's the third largest group of stocks? Is it technology? Not in terms of weight, but in terms of actual components in the Russell 2000. Is it tech?
I think regionals are going to have a monster day here today off the CPI. What? What's
the third? So regional banks and biotechnology represent the largest number of components in the Russell 2000.
I don't know what the third is off the top of my head.
I'd be curious. My suspicion is it'd be some kind of technology, right? Or technology as a group.
I don't know. I really don't know.
Yeah. Let's talk about that in today's meeting. Throw up slide 2 there, Spencer. This is a big theme happening right now. I think this needs to be front and center, I think.
Everything making new all-time highs.
Everything?
A lot of things. Mid caps are making new all-time highs out here today. That's pretty wild.
Mid caps of the non-large have been the strongest.
Even small cap 600 is making new highs today. Not new all-time highs, but new highs.
557 for the MDY. We are not making new all-time highs for mid caps.
Yeah, we are. In pre-market. Yeah, we are. Pre-market, it's an all-time high, sir.
Pre-market, the mid caps are at 557.67. The all-time high was above 558. So we're still another point away, which is close.
Are you using an intraday high now all of a sudden? You're the closing prices guy, but when that doesn't work for you, then you become the intraday prices guy?
Market hasn't even opened. You're trying to talk to me about closing prices? Market hasn't even opened yet.
I don't need you to confirm whether or not something's at an all-time high for me.
Okay. I am confirming that mid caps are not at an all-time high.
Copper's not at a new high either.
Copper is not. Copper's been making new 52-week highs. Already has been.
Okay, so we could check that one off.
We've been checking that off for weeks, months, maybe. Yeah, that's already been happening.
No, where you got the line drawn there.
Those are the close to the all-time highs. Yeah. Those are the all-time closing highs. We're flirting with those levels, right? If we break through 5, we see 6. If we see 6, we probably see 8. Right?
I think the most bullish thing for copper is that gold stuck the breakout. And we've been saying, looking at these bases that began back in 2010, 2011, when one goes, the other's going to follow. It's that copper gold overlay chart. That's the best chart right now.
What about Fonz? You got the updated dollar and rates chart. Let's talk about this, because this to me has to be the most important developments right now. Is some of those bull flags, those bullish consolidations that we were seeing in both the U.S. 10-year yield and the U.S. dollar index have not resolved in the direction of the underlying trend. Have actually resolved lower, right? Is that not the most bullish development in the world right now?
What specifically resolved lower?
The U.S. 10-year yield and the U.S. dollar index.
Yeah, that's what I was trying to say about regionals and biotechs. I think they're going to catch a nice bid as rates roll over here.
And the correlation with rates and the dollar continues. That doesn't separate, right?
Yeah. So how are rates moving this morning? I missed that.
Down. Bonds are ripping.
How much though?
For the bond market, a lot. 30-year bond futures are up almost a full %.
Yeah.
For the bond market, that's a ton.
Okay. Yeah. Banks are going to rip today. Great. I don't know. I think, it's time to get crazy long. I think you want to be super, super, super long right now. Everything's working.
I wouldn't say everything's working, but I do like the long. I also like the fact that volatility is at such depressed levels that you can buy call options in things that you like and go out super far and get them really, really cheap. I really, really like that a lot.
Throw up the prior cycle high checklist, Fonz, just to close the book on this. I don't know. Can we close the book? What do you think, JC?
No, we cannot close the book.
We got one.
I wouldn't want to close the book on this. I'd want to continue to monitor it for sure.
All right. Well, these things are leaving the station.
Good.
So energy is the one holdout. Look at that. See that?
Yep.
And then we're getting
is energy really? Should energy even be on this list?
Yeah.
You think so? Why? You don't think energy is like its own thing?
It's a risk asset. Don't overthink it. The chart looked similar to all the other sector spider charts.
I think you're overthinking it by calling energy a risk asset.
Kidding me?
I am not.
Energy's not a risk asset? It's defensive now? You're one of those guys?
It has been over the last couple of years.
I don't know. Energy.
What do you mean you don't know? Do the math. Of course
energy
it has.
Rallied off the pandemic lows in the bull market in 2021.
What are you going to say about lower interest rates? Lower interest rates is evidence of risk appetite? It is now.
I think energy is going to be okay.
Nobody's saying it's not going to be okay. All I'm saying is should energy be on this list? I would argue no.
Huh. I'm long Freeport.
How much energy exposure does Freeport-McMoRan
have? Do they do coal things?
I don't think so.
I don't think so either.
Do they? I don't think so. I think it's just rocks.
It's a nice chart.
Freeport-McMoRan. What about SCCO?
Not long, that one.
We're in the options. What about SCCO making all-time highs? Right?
Long
We're talking about Freeport-McMoRan. That's nowhere near.
I'm long Nucor and Reliance.
That's steel.
Yeah.
Freeport-McMoRan still stuck below those former highs from the great financial crisis. But look at SCCO, Southern Copper. What an absolute beast, making new all-time highs. You know, when you look at a chart of Southern Copper and you overlay a chart of copper futures, part of the reason why I've been so bullish copper is because of what Southern Copper has been doing.
Yeah, Southern Copper broke out long before the others were even working. Southern Copper's been a great chart for a long time.
Yeah, talk about a relative leader for sure for quite some time. Chris Ciovacco today coming on. He was on my podcast a few years back, you know, keeps a low profile, but he's coming on the show. I like that. You guys are in for quite the treat.
Right? Yeah, that'll be good. What did you think of the squeeze video last night?
I mean, I know it's near and dear to your heart. It is Strazza's favorite. Why don't you drop the link for the replay there, Spencer? Strazza's favorite scan that we do. First of all, Spencer's a big fan of all the scans that we do. He's a big fan of those in general. But for Strazza, the short squeeze list is near and dear to his heart, even when it's not like meme season, right, Strazza? Like you're always looking at this chart. And if we like a chart, like let's say we want to buy a stock and there's like maybe 2 or 3 stocks that we like, and we have to decide which of the 3 we want to buy. If there is one that has tremendous amount of short interest and a lot of days to cover, we're going to choose that one every time, right?
All things equal, we always want the one that has negative sentiment with it.
What do you feel about the volatility index making new lows and the volatility of the volatility index making new lows? In other words,
makes sense.
Insurance for markets, it does make sense. Insurance for market portfolios is as cheap as it will ever be.
Mm-hmm.
And yet nobody wants it.
I don't, why are you so enamored by this? I don't. Yeah.
Well, because call options are so cheap. I'm enamored. Me personally, I'm asking you what it means to you. What it means to me is that we can buy call options in stocks that we like for very, very, very cheap.
Yes. So that's how that's impacting me in my life. I own lots of call options right now. a lot of call options. So
Right.
low volatility is good for that. But it's also like the VIX right now looks like what the VIX should look like in a bull market, right? A month ago, it was like, oh, what's going on here? Now it looks more like bull market VIX.
Yeah, I'll give you that. Yep.
And
And
the
another
VIX
thing, the volatility index can stay low for a long period of time, right? So while the VIX is mean reverting, while volatility is mean reverting, it doesn't have to mean revert immediately.
Yes, that's right. And you know what other two charts are starting to look more and more like bull market charts? Like you just mentioned, the dollar and rates. I think those charts at least stop moving higher, tailwind for stocks. Just stop moving higher, right? So you got little short-term tops here. If these just die out, fall back into their old range is great. I think that's fantastic.
Yeah, I think it gets back to what we say all the time is that the market, it's not that the market wants lower rates or the market wants higher rates. I think there's a little bit of that, but I think it's mostly the stock market just doesn't want a lot of movement really fast, right?
I think investors want lower rates. I think a lot of investors probably hope for lower rates.
This cycle,
Yeah.
but for the majority of my career, it was the exact opposite.
Well, yeah. It's been this way for a while, though. Now, right?
Couple years.
We all freak out about the Powell, and hope rates stop going higher.
I'm talking about the 10-year yield.
Better.
I'm talking about the 10-year yield. So this
Yeah,
Powell guy, this Powell guy is not my problem.
No, it
Didn't
is.
he
So
step
please-
down? Didn't
No,
the
no.
Powell guy step
this.
down?
Get
Or
this.
that was the Gensler.
So they set the Fed funds rate, which is actually the risk-free rate. So then
Right.
the 10-year is just a premium on top
Sometimes.
that they set.
Sometimes
Right.
it's a premium.
So the Fed actually set.
My understanding is the lack of premium and the longer end of the curve has been a problem, which is why we're going into a recession. Is that what are you told those lies also?
I don't overthink the bond market.
No, I know, but they've been telling me for 2 years that because one yield pays more, the yield of one bond pays more than the yield of another, it makes people very sad, and it makes people think that we're going into a recession.
Yeah,
What kind of serial killer thinks that way?
you're talking about inverted yield curves.
I mean, they seem to be like very upset about it. Like for years now, people are just like very sad that the yield of one bond is higher than the yield of another. And it's made people sell their stocks and do all kinds of crazy things. Like, you don't think that's weird?
Well, wouldn't they say, hey, we got the inverted yield curve and then you had a bear market?
They're not even talking about the stock market. They're like crying about recessions and, selling their stocks, and just makes them very sad.
I think we get a recession soon.
I hope so. I mean, listen, for a lot of people, especially people watching this show, recessions are a choice, right? So if you're going to sell all your stocks because other people might be in a recession, like that seems foolish, no?
I mean, things have been good, Job market's been so hot. It's just crazy. So
I got one more thing before we bring on Chris. What about all these people think that their real estate value is going to go up? This is a little bit concerning.
What are you talking about?
I mean, no?
What are you talking about? I'm not sure what you
Throw up, Spencer, hold on. Spencer, throw up slide, the new slide 2 here. So these are, this one comes from the University of Michigan. Shout out to the NCAA champions this year, University of Michigan. Apparently, they have this is from Apollo's chief economist. Household expectations to home price appreciation back to 2007 levels. So the most amount of households that think their home values are going to increase over the next 5 years that we've seen since 2007. I thought this was interesting. I like extremes, right? Usually sentiment is somewhere in the middle. It's not very helpful. But this was pretty extreme. Everybody thinks their real estate is going to go up. I guess I'm not one of these. I guess maybe I'm a little bit of a doomer. I've just assumed that my property values have increased too much, if you ask me. Right? I mean, my neighborhood, like I talk to my neighbors and like they're just like, yo, you see that house on the block sold for 1.2? Nice. Like it's like in conversation, right? It seems a little bubbly in my neighborhood anyway. Granted, I guess I'm spitting distance from New York City. So I'm kind of like in those New York City suburb conversations, which I guess is probably, I guess it's been a good place to be. A lot of places have been a good place to be, hasn't it?
I don't know.
How are things down in the Keys? Has your real estate appreciated too
I
much?
thought suburbs around the city have not been great places to be. It's like Phoenix and Dallas and Miami. It's all the warm weather areas.
Oh, way, man. Suburbs around New York City have done very well.
It just depends on which city you're talking about.
It depends
Too
on the time frame too.
Too well is my point.
It depends on the time frame too, because a lot of these New York City suburbs are like still barely getting back to levels that they're at before the financial crisis.
Hold on, Strazza, you're down in the Florida Keys.
Yeah.
And you've owned your real estate longer than I have, really. But since the pandemic, how have you done well there? Or
Crazy. It's been crazy. Yeah.
too crazy, you think?
I bought 10 years ago. I mean, the houses here are small and they're worth, some of them $1 million. They're very small. So yeah, I think it's insane. But I thought it was insane 3 years ago.
Right. Shows you how much we know. I thought it was a little insane 3 years ago too. So to be fair, so the answer is we know nothing.
Yeah.
And everyone is now dumber for listening to this conversation.
No, but you're right about this. This is not, it's not great news for home values, this chart.
Yeah, because think about it. Our households, are people who, is the average household informed and aware enough to actually be correct at consensus? Or do these households have it wrong? Particularly at consensus.
I mean, the pandemic, I thought, wow, real estate is just going to tank here.
That's what I thought too.
Like zoom. So it's like, I don't think too much about it. It's not for me.
Yeah.
I got realtor friends. They tell me things.
Isn't 5 years though just too short a time horizon? It's like giving an end of year S&P price target. It's like, what's the point of that, right?
Yeah, but 10 years ago, expectations for the same time horizon were super low.
Yo, can I get a go New York, go right now, Spencer? How about that? Huh?
How about those Knickerbockers?
Right. I'm pumped
about them.
How about those Knickerbockers? I'm rooting for the Knicks.
I'm excited.
I'm mostly rooting for the Rangers, but I'm rooting for the Knicks too.
Yeah, felt good. One more.
Big one last night. All right. So we have Chris here. Should we
bring him in?
Bring him on. And if you guys haven't seen, I dropped his charts in the deck. Sent over quite a few, which we appreciate. We always love when our guests share charts with us. So Chris is here. Chris, you ready? If so, I'm gonna go ahead and bring you on. Let's do this.
Nothing would make me happier than the Knicks kicking the Celtics ass.
Yeah, I mean, you and me both. JC, you and me both. All right. Bring Chris on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is, Chris.
Good morning, gentlemen.
What's going on?
I'm going to say I'll agree with you on the Rangers, but I got to defend my Celtics.
Oh, I mean, listen, if what's his face? What's his face? Tatum's just not a killer.
I'm with you on that. I'm totally with you on that. I've been a Celtics fan for years. He can be his own worst enemy. Yeah. I don't understand in the NBA. Why is it when it's the end of the game, the star player like Tatum will just dribble the ball, totally get out of everything you've been doing the entire game, wait, and then take a bad shot. He does that a lot.
Yeah.
He's gotten better. He's gotten better this year, but he does that a lot.
I haven't seen it.
Why do you run your offense the entire game, and then at the end of the game, you just totally get out of your offense and go straight one-on-one? I've never really understood that.
I think Jaylen Brown's more of a killer. He's not going to get the ball at the end. They're going to give it to Tatum, but Jaylen Brown's got that killer, right?
He does, and he used to turn the ball over a lot, and he's improved on that. He has. He used to have a lot of ugly turnovers near the end of the game, but I agree with you on that. Tatum is just, obviously Tatum's wacky talented, but
yeah, super talented guy.
There's just something that's just a little off, even on his demeanor. Yeah. His body language on the court does not come across as
I'll tell you what, Chris. Derek White might not have the talent that Tatum's got, but Derek White is a killer.
Derek White is the man.
He is the man,
He,
and he keeps
he
getting
is the
better.
man.
He's the
Now
man.
let's switch gears to Rangers.
Let's switch gears to the market.
Rangers
Sorry.
are looking
We could do this all day.
probably about as solid as the Rangers have looked in the playoffs for quite some time. And I thought it was kind of weird when the playoffs before they started, the statistical stuff really didn't give the Rangers a lot of love, and I really didn't understand that. They've got some killer instinct guys on that team. The Rangers got a shot at going all the way. They do.
I hope so. I've never been to the Stanley Cup, so if the Rangers go, I'm going.
I may be up there. I may join you. I may
All right, let's go. Let's go.
I was born in Peekskill, so the Rangers are kind of my second team. I'm a Bruins fan, so I don't really want to talk too much about that overall relative to the Rangers. Yeah, but
why don't we talk about the Jason Tatum of financial markets, which is the Russell 2000 small caps, which continue to be a disappointment. And what that means to you, if anything. Do you care what the Russell 2000 does?
I really don't. If you look at the long-term history of markets, it's good when small caps are doing well. You don't need them to do well. And what does it mean? I think it's telling you that we're in a different world, that inflation's not going away. And that's not good for companies that have a lot of debt, especially companies that have a lot of rolling debt. And there's a lot of debt there. And if you look at how much debt has to be rolled over for S&P 500 companies versus Russell 2000 companies, they've got a handicap right now with interest rates. And they had a headwind for almost our entire career when we had interest rates dropping from early 1980s all the way into, let's say, 3 or 4 years ago. And now that's a tailwind, I should say. And now they have a headwind. It's just a totally different game for them. And then you look at compared to somebody like an Apple or something that's sitting on a ton of cash, they don't really care what interest rates are. They don't have to borrow money. So it's not surprising that they're lagging. But if you do look at the chart in isolation, especially a VWAP chart, they're laggards, but they do look like they want to join the bull market. They've just not been able to fully turn the corner.
You brought along some long-term charts, which I love that you did this. I whenever in doubt, zoom out, right? Is the old saying, and so underrated. Spencer, can you throw up that first long-term chart? Let's go through these. This is great, Chris. Why don't you walk us through what we're seeing here? It looks like this line is going from the lower left to the upper right.
Yeah, I love it. Keep it incredibly simple. You probably read this somewhere. I remember in a book one time, one of the market wizards or somebody said, I want to invest in things that you can put the chart on the wall across the room and you can see the trend. And that's what you've got here. And really what I'm saying here is, look, we're in a bull market. That's what this chart says. You've got a long base. We broke out of it. And look where the shorter term moving averages are coming into the more important 200-week moving average in red. So secular trends have a tendency to hold at or near an upward sloping 200-week moving average. And that's pretty much what we got here. And there's not a lot that would make you concerned here, even if the market pulled back. Potentially a lot of support underneath price.
I love that you marked the 2022 bear market there. I would agree wholeheartedly. Looking at the S&P 500, you're marking it from the beginning of 22 as being that bear market. When you look internally, you could date that back way further than that. So, to me, not only did it have the declines of a bear market, it had the duration, it had the time of a bear market. Many people have argued and were arguing with me then that we were not in a bear market or whatever. And then at the bottom, when we were buying stocks, then they were telling me we were in a bear market, right? You want to talk about that period? How do you think about that? Was it like a reset? Like, what are you thinking about that period?
I think that period was really the markets. So if you go to the COVID low on that chart, you can see in the lower left-hand corner is the COVID low. The COVID low is the end of the fear of deflation. So that's the full flip out of the old world post-financial crisis, where central bankers and market participants are scared of deflation and they're not particularly concerned about inflation. And somewhere after the Fed goes to unlimited QE and we're sending out checks left and right, and we're sending out checks as if we're still in an emergency when we're not in an emergency. That period in there is where you flip to concerns about inflation. And the reason why you saw things deteriorating early was those are your early adopters that are saying, hey, inflation's going to be a problem here soon, and the markets are not going to like it.
And who was it? Chinese internet, speculative tech, biotechnology, like those were the first ones to peak.
Yes. So I guess I would want to ask you this. Looking at these charts, I think the way you can look at these things, and you tell me if you're seeing it in a similar manner. So you've got the bear market. When we had a correction last year, let's say the 10% correction that we had late last year, typically what you're seeing there is that's almost like a mini bear market. That's the market getting scared about the same topic again, but the magnitude's not as big. Now, is that what we've seen recently, do you think? That the market's been concerned properly that inflation wasn't going to go away and the Fed wasn't going to cut rates 3 times this year? What do you think? Why are we seeing some stall?
So I don't think a lot about the Fed, and like the second derivative of what people think the Fed's going to do. Like that's too hard for me.
I agree. Price is the king. I agree.
Yeah. How I look at it is in terms of sector rotation. Are the laggards catching up to the leaders?
Mm-hmm.
Or are the laggards breaking down to new lows and the leaders catching down to the laggards?
I love it. And if you look at the chart of RSP, the long-term chart, it answers your question.
And when you go sector by sector, so, to shout out to our good friend Ari Wald, he calls them the culprits, right? So like back in 21, the first to peak were the culprits, were exactly what you alluded to before. Those, early adopters, if you will, of recognizing that inflation's coming and the market ain't going to like it. And these are the most vulnerable, biotechs and speculative tech and, all these growth stocks and the IPO index and, all these things that, would theoretically get hit the hardest if inflation is here. And they did. And those were the culprits. And then throughout the year, fewer and fewer stocks were making new highs. More and more stocks were catching down to the original adopters, as you said. I love how you put that. We're just not seeing that now. Like, if you had to, if you're like, okay, we're going into a bear market, the market's going to collapse. If you had to pick a group that's going to lead the market lower and drag us lower, there's nothing you could pick, right?
Yeah, I'm in agreement with you. I think I saw you at one point say if you're not getting a lot of new lows, it's very, very difficult for bad things to happen.
Just math, right, Chris?
Yeah, that's kind of the way you do look at it. I like to do this a lot. You can take a chart and you can say, if I take my long-term market leaders, SPY divided by RSP, SPY is still a long-term leader. If I take XLK, the tech sector, and I divide it by RSP, XLK is still the long-term leader. But then if I look at RSP in isolation, the laggard looks good. That's a healthy market when you've got RSP coming up out of its base. RSP looks more like, if you look at those moving averages on this RSP chart here, kind of coming together, where your slower moving averages and price we're getting that tight cluster look above the 200-week moving average in red. That's very, very similar to what your market leaders looked like around mid-May of last year. You had that tight cluster look. They led to the upside. They broke out. They just really got too extended. And it's looking more like your leaders have taken a break rather than rolling over, as you said. It doesn't look like doesn't look like they're in trouble.
Right. And then what do you got? You get the rotation from the worst areas, the ones with the super high short interest, Chinese stocks, staples and utilities that have been the biggest underperformers forever.
Yeah, and utilities have been killing it lately. That's a good thing, not a bad thing.
Right, but and I want to reiterate, it doesn't necessarily mean that it's a negative that utilities are leading. If anything, it's reiterating that the laggards keep catching up to the leaders. You saw it in the fourth quarter last year when small caps weren't participating. A lot of things weren't participating into that September, October period. And then you got the rotation and the ripper. You know, going into last year, for example, going into 2023, everything was working in the back half of 22, right? The market bottomed in the summer of 22.
Yes,
Everything was working going into 23, except for mega cap growth,
that's
except
true.
for big tech. And what happened? At the beginning of last year, we had the best first 6 months in the history of the NASDAQ.
Yeah,
You
I'll
got
give you
that
credit on
rotation,
that. You were one
right?
of the first ones to say, "Hey, everyone's talking about a bear market still. There's a lot of good things going on," and that's exactly what happened. I still think you're in a situation from a long-term perspective. Your long-term leaders are your old long-term leaders. They're tech and growth. However, they still really haven't put the final nails in the coffin that would make you say, let your guard down on leadership. They're fine in isolation. There's no problem. And at the moment, they are absolutely still the leaders. But as you and I know, we don't want to take any chart and project it into the future. It's what's in front of us today. Let's wake up tomorrow and see what it looks like. And your point's well taken. We do have exposure to tech. We do have exposure to semiconductors. And you may say to a client, this may sound odd, but the fact that they're taking a break and the fact that the laggards are starting to participate, even if we don't have overweights to those, you should be happy to see that. That's what we want to see. A bull market's not going to work if it's semiconductors and XLK every single day.
Right.
And all the other charts look like garbage. That's a disaster waiting to happen.
I'm glad you brought this up because a big thing last year was, it's only 7 stocks. It never was. That was a lie. That was literally people lying to their audience that it was only 7 stocks. It never was. In fact, it was a hell of a lot more than 7. Like it was.
Yeah, look at the chart of RSP. I mean, that's not 7 stocks. And the other side of that too is if you look at things historically, when we're using capitalization weighted indexes, that's kind of what you get in a bull market. You can go back and look at any bull market and you could falsely pick out your 5 or 7 leaders. That's not abnormal in a bull market. That's normal. I mean, you and I both know from the 2000s, you could name the list of the Ciscos and all of the stocks that led there. It was a handful again. That's not abnormal. And I agree with you. All you had to do was look at a VTI or an RSP back then and say, where are you getting 7 stocks? It's just not there.
Right. Yeah. People were either maliciously lying to you or they just didn't even bother to look. Right. Neither one of those is a valid excuse. Another thing I'll point out that 2000 period, 03 to 07, that was my first bull market of my career, by the way. And utilities were an outperformer, right? Utilities led in that bull market. Technology was an afterthought, right? So
yeah, I came in 94. So, and I think I have that gives me a little bit of an advantage because I saw the last 6 years of the euphoria of understanding just how silly things got. And the other one thing that's even more important, how long the silliness can last.
yes,
It can last a long time.
when was the
And
irrational exuberance speech? 96.
yeah, exactly. And then
that
we
was
got
after 95, which was a hell of a year, right? So the irrational exuberance was 96. You had 2 more years before the 98 crisis, and then another 2 years after that.
Of your leaders, right. And between 98 and the peak, that's when things start to fall apart underneath the surface. I almost want to say that some of your equal weighted indexes and things really peak in 98 and they never really keep running after that. But, there's a lot to learn there. But we're in a different world now with inflation. It's different. So I think the period that you really want to try to familiarize yourself with is the secular bull market from 1950 that goes all the way out to 1968, which on a chart is very, very similar to the secular bull market from 1982 to 2000. The difference is the 82 to 2000 is in an environment where long-term interest rates are falling. The secular trend in interest rates is lower. That is not the case in the 50s. Interest rates are rising, and yet we still had a bull market. And what was the difference? The difference was that bull market was wacky volatile. You have a lot of pullbacks. There's 20% pullbacks. There's 30% pullbacks within the context of that secular trend. In the bull market that a lot of us grew up in after the 1987 crash, there's almost nothing after that. There's a 13-year period where you don't really ever get a really, back-breaking drawdown. So the moral of that story is rising interest rates are not a killer for a secular bull market, and stocks can do well. And if you think about coming out of that, if bonds were a decent place to be from 1982 till just recently, and maybe they're not a decent place to be walking forward, that in and of itself can, propel stocks higher. But you've got to learn how to ignore volatility in this environment. If you try to trade volatility the same way that you traded volatility from, let's say, 1994 to 2000, it's not going to work.
I love what you said about the rising interest rates. I have a chart here that I want to share. And this is the 1950s. I love how you're telling the kids to familiarize themselves. Here, let me just throw this up. To familiarize themselves with the 1950s, because some people are like, what? So if you throw up slide 2, Spencer, just to show what Chris is talking about here. This is the Dow Jones. Oh, whoops. Screw that up. Here, Spencer, throw up the new one. Here you go. So here we're looking at the Dow Jones Industrial Average and Dow Transports going back to the 1950s, and the U.S. 10-year yield rising that entire time.
Yeah, that's a wonderful chart. I mean, it's wonderful. I mean, it just shows you that it is possible for stocks to propel higher. And notice the volatility in there. There's a lot of volatility in your transports and your industrials. And that's where focusing on that very long-term trend, a secular bull market has a tendency to make a stand at or near an upward sloping 200-week moving average. It helps, like you said, when in doubt, take a big step out. And you really need to learn how to do that, even if you're day trading. This stuff matters if you're day trading. Why does it matter? It matters because you need to understand if you're trading utilities in recent weeks. Are you trading a primary uptrend, or are you trading a counter trend rally versus the S&P that's going to end? So you need to understand where you are. So if you own the market leaders, those are the easiest ones to hold, the primary trends. If you're trading rotation, you don't want to keep those. Those are rentals. You rent those, and then you need to get rid of them when the primary trend reexerts itself.
Let me ask you something, Chris. So you can see here in this chart, 1955 was a heck of a year, right?
Yep.
If you continue forward, you're going to look at 1965 was a hell of a year. We just got off talking about how 1995 was a hell of a year. 2005 was a hell of a year. Here we are going into 2025. Does that mean anything to you?
It does. It does.
Funny coincidence.
If you look at time, so if you walk forward calendar days from the major lows that occur in the 1973-74 bear market, and you look at the major lows that occur before the bull run in 1950 and count forward, and the one that's more familiar to people, it takes you right now on that scale, we would probably be more like 1990 right now, which would be good news. And you've still got a runway is the point of that. So you might have a bull market that could end in 2035, 2032, 2038. And a lot of that's demographically based. So think of some things. We always like to say tuition's gone through the roof because the government made loans available and they drove up the price. Well, maybe that's part of it, and it is part of it. But the big reason why tuition's gone up so much is demographics. There's been a massive wave of people coming through those universities, and very similar with housing right now. We got really scared with housing, an ITB or an XHB. No one wanted to build houses after the financial crisis. Now you've got the worst of both worlds there. You've got a shortage of supply, and you've got this massive wave of millennials and Gen Z coming up that eventually are going to buy houses or are already buying houses. And there's a lot of similarities there to the 50s as well. So if you just look at the secular trends, and by the way, you don't need to know any of this if you're just looking at the charts. The charts take care of all of it. None of that really matters. The only reason why it can be helpful is if you if you have a story around what you're looking at, it's like charts. It gives you something to manage against. If the story starts to fall apart on you, you're like, well, I'm not seeing the world in the right way, and I better figure it out, which is very, very similar with charts. Does it still look like a secular trend today? The answer is absolutely, positively, yes, it does.
Chris, can you tell the folks, like, through what lens you view the market? Can you tell me a little about your day job, right? Because I think this adding context to the conversation really helps. Like, what is Chris even doing with this information?
Right. Well, we manage money, so we manage, and that is very relevant. So we're going to probably be, our time frame might be a little longer than yours, even. So I do care about where stocks will be in 2 or 3 years. That does matter to me, or at least I'm trying to understand that. And most of it's retirement money. It's long-term money. And it's the type of money that you really can't be making mistakes with. You're not speculating with this money. You're trying to, if you're in a bull market, for the most part, you're trying to capture something close to market returns. And of course, you would want to outperform if you can. But historically, in this type of environment, even if you captured 80% of market returns in these secular bulls with retirement money, which you may or may not be pleased with, you will be pleased with the magnitude of that move. Stocks can move a long, long way in this type of environment. So we're not day traders. We probably focus mostly on weekly and monthly charts. I don't even mind looking at quarterly charts to get some understanding of what's happening in there. Having said that, though,
Quarterly charts, huh?
yeah, I don't mind looking at a quarterly every once in a while. The problem with the quarterlies, as you might imagine, is it's 3 months before the chart gets nailed down.
Yeah.
And that's a big caveat. And that's what's great about monthly charts. It's only, 20 some odd trading days and that chart gets nailed down.
I throw up some quarterlies just for shits and giggles sometimes, especially when there's data going back like 100 years, which is like 5 things. So I'll do that on occasion, but monthlies are good enough. Like,
the monthlies are, if somebody asked you, you can only look at 1 or 2 time frames, mine would absolutely be weekly and monthly.
weekly and monthly. Agreed.
I'd ditch daily. Again, having said that, though, if you're a day trader watching this, what we're talking about is relevant to you. It is, because it helps you understand, am I holding this position? How long can I hold it? Do I need to trade it? And the same is true for us longer term guys. Every once in a while, if I'm funneling new money into the market, even a 60-minute chart can be relevant to me, where I'm trying to decide, is today a good day to put some of this cash to work? It all matters. All time frames matter. The question is, where are you zeroing in on what's most important to you, and what are you more willing to ignore? So on our time frame, the current pullback or relative weakness that we've had in tech, I'm willing to ignore that in the short run because the longer term trend is still intact. And if you want to know, how is that trend intact? Last night I did this to prepare for this, because it just kind of gets your mind going on what's happening in the market. Took 300 some odd ETFs, that covers pretty much every corner of the market. Divide them by the S&P 500 and see where your long-term trends are, and do the same thing with XLK. And really the answer is, we're still in an environment from a long-term perspective where your winners, so this is the tech sector versus the equal weight S&P 500. So you can see the market comes up in the yellow areas, and that's where you're consolidating. There's really no particular leadership in there. And you can make an argument, JC, that those periods with the yellow markings, the yellow highlights, that's the market looking ahead and seeing that, we've got kind of a problem potentially brewing with inflation. It starts very, very early. And now we've broken out to the upside. So behavior changes near the green highlight, and tech has been consolidating above that previous box now. And all of that consolidation is happening above an upward sloping 200-week moving average. Now there's a but coming. You can also look at the slope of that 200-week, and it looks a little vulnerable right now. So unquestionably, tech is still a leader and still in an uptrend on this chart. It's just a little bit vulnerable at the moment, but if it goes backwards, it most likely has relative support underneath.
What about the fact that when you study every bull market in history, in almost every one of those bull markets, technology was a leader?
Well, I think there's
When
a
you see
logical
technology as a leader, isn't that perfectly consistent with bull markets?
It is absolutely perfectly consistent, and we can take that a step further. You were to say, so if I do care about what might be higher in 2 or 3 years. By the way, when I say I care about what might be higher in 2 or 3 years, that doesn't mean I'm necessarily holding everything for 2 or 3 years. But I do have a portion of my portfolio that if all goes well and we're in a secular bull, I'd like to be able to look at my cost basis screen at one point and have every single one of my positions be a long-term capital gain in that type of environment if I can. I probably won't be able to do that because of the interest rate environment. But you said, why does tech lead? Why would anything lead in the long run? Ultimately, you've got to grow your earnings, or there has to be a perception that you're growing your business or your earnings at a faster rate than the market itself. What does that typically? Tech and growth stocks. Those are your long-term leaders. They've been the long-term leaders, and they probably will continue to be the long-term leaders until proven otherwise.
You brought a couple of more charts here. First of all, can you talk about why you compare? I mean, I don't want to put words in your mouth, but why you choose to compare a lot of these things to the equally weighted S&P 500 and things like that? Like you really like these equally weighted charts a lot, but we live in a market cap weighted world, right?
We do. So the market cap weighted world, meaning what I'm trying to do there is I'm trying to see, we live in a market cap weighted world. What's happened is SPY has almost become a tech fund. So really what you're doing there is, I'm not saying RSP is necessarily more important. What I'm trying to understand when I look at those charts is that'll really tip me early. Are tech and growth, is there a problem there? Your real long-term market cap weighted leaders, if RSP is starting to kick tail in that environment, longer term, that would be a little bit concerning, but it's not there. But the go-to is relative to VU or SPY. That's the go-to. It's fear. JC is what it is. I'm a risk manager, so I'm always terrified that my positions are going to flip on me, and that helps me quickly. You can take any position you want, do some quick division, and look at it on different time frames and say, hey, I'm okay. There's nothing's changed. Nothing's here. And the read so far this year has been this. Yes, there's been sector rotation. I don't think there's evidence of long-term shifts in leadership yet. I just don't think we have it.
Correct me if I'm wrong, but sector rotation is the lifeblood of a bull market, is it not?
You want to see it. Like I said, if it's weird to tell a client you should be happy that tech's underperforming, but you should be, because it tells you that the probability of the bull market continuing is much, much higher. So I wholeheartedly agree with that. And it can be unnerving.
Yeah.
And the other thing that you have to do is understand your time frames. So you don't want to get overly wound up. I think the first 3 charts that I sent, which we looked at some of them, were you looked at the S&P 500 in isolation, SPY, RSP in isolation, and XLK. All 3 of them are clearly in uptrends. And what that tells you is don't get too cute. Don't overtrade. Understand your time frames. Understand where the leaders are. And don't get overly concerned about relative charts when everything is trending up. Everything's trending up at the moment.
Let's just play devil's advocate and choose a culprit, right? In order to have a bear market, in order to have a correction of any kind, stocks need to go down. And historically, there's at least one group of stocks that are leading the charge to the downside in this environment where we have industrials making all-time highs, European banks making new 6-year highs, technology, right? You're seeing all of these big things. If you had to pick one sector where be like, that might be the one that's most vulnerable, if there were a correction coming, I would be looking for them as a potential culprit. Is there any group of stocks that you're looking at?
Well, I do. I think you've just seen it, really. So you just saw it. So we come into the year, and out of the gate, tech and semiconductors kick everybody's butt early in the year. And why is that? That's because the market is expecting multiple rate cuts from the Fed. They think inflation's in the rearview mirror, and slowly the market has that mini reignited fear of inflation. And why would that be the case? It's really a valuation play. You can have the best company in the world, but if the valuations are totally out of control, and then the interest rate expectations change. And why is that? It's discounted cash flows. So when you look at growth companies, you're typically paying for earnings that are going to come in the future. If I own a utility, at least in the old world, I'm really a dividend play. I'm not paying for future earnings. I'm paying for steadiness. So your valuation models, everything's tied to interest rates. And if interest rates, the expectations for that change, then you've got something. So what would derail the bull? I think it would be inflation. If they can't get inflation under control and it really starts to get away from them, which is exactly what happened in 2022, then just like tech and everything you said early got whacked early there, that will happen again. We've had a mini bout of that where they've underperformed in recent weeks and recent months. I think it's a mini bout. I think it's a counter trend move within the context of a primary uptrend.
There's no evidence that it's not.
Exactly. And until you see the evidence, you don't want to extrapolate on charts. That's a huge mistake either way. So you don't want to assume that your leaders are going to lead forever, and you don't want to be forecasting doom into the chart. But you're right. There's just nothing there right now that would make you think something radically has changed here.
The market will sniff it out. Like you talked about before, early 21, market sniffed it out. You had the culprits. It was very obvious, right?
Yeah.
Well,
I think one of the
before
hardest things to do on any time frame is this. I'm building models now for secular trends. It is very, very difficult, no matter how you look at things, to differentiate between a 10% pullback that's going to turn into a 30% pullback and a 10% pullback that's going to end at 10%. The math and the look and the fear really doesn't look significantly different in most of those cases. Now, there are some subtle exceptions and some things that you can do, but really what charts do for you is they help you understand, where am I right now? And what are the probabilities of that trend continuing? So if you were to look at us breaking out of bases right now, and I call it a full bore bullish look, when price is above all of your moving averages, your fastest moving averages on top and your slowest moving averages on the bottom, that's full bore bull. The more you look like a full bore bullish look, the higher the probability that a pullback is going to be followed by a higher high.
Yeah, I'll give you that. And one more thing I wanted to mention, because you didn't mention day traders. We've been talking about like zooming out, climbing up one time frame more. You and I both agree, weekly and monthly, right? If you're a day trader, maybe those monthly charts might be a little long, but the daily charts can be the longer term time horizon. If you're a swing trader and you're looking at daily charts, maybe the weekly and monthly charts can give you more structural perspective. So I think, and this is a lesson I learned from Brian Shannon very early on, a good friend of ours, and he does a lot more intraday stuff. So his daily charts and weekly charts are the long-term charts for him, while, weekly charts and monthly charts are the long-term charts for me. But the principles remain the same. Go 1 degree higher, one time frame higher, or
and
two.
even one lower sometimes. Both. You want to go both ways. And bringing up Brian, everything that we've just said about inflation, everything, if you look at anchored volume weighted average price charts, which is his baby, it agrees with everything we just said. There's nothing on those charts that say tech and growth are doing anything other than taking a break at the moment. And there's nothing on these charts so far that look different, radically different from the correction last year, meaning it looks like it's corrective activity, shorter term fear about inflation. So what do I mean by that? Inflation's not going away, but the market doesn't think it's going to derail the bull market, and it doesn't think it's going to derail the economy.
And just to circle back, last point here on that anchored VWAP. Essentially what Chris is saying is that in bull markets, investors are rewarded for owning stocks, and in this market, investors are being rewarded for owning stocks, right? Hanging out above that average volume weighted average price is essentially that anchored volume weighted average price. Investors are making money. That's
let's
what
go back
happens
to
in bull
small caps
markets.
real quick. If you were to look at those anchored volume weighted average price charts, and you were to look at where the S&P 500 was in mid-May last year, that's what small caps look like today. They're above all of those. If you can draw any of those anchored volume weighted average price lines you want, IWM is sitting above all of them right now. It hasn't moved away, but what it's telling you is most people that own it, for the most part, the average Joe relative to price weighted by volume is profitable. Not by much, but they're barely profitable. So there's not a lot of overhead selling pressure there. It should start to move a little bit better. It just hasn't done it yet, but it's not a bad looking chart. In isolation, a relative chart looks like garbage.
Well, there's a denominator fallacy there too. Keep that in mind. Because the denominator and those fractions have done so well, but your point clearly taken. Chris, a lot of fans of yours on the chat. Chat is loving you. They're upset at us for not having you on enough. So we're going to have you back soon. Spencer, that's on you. Make it happen.
Well, I really appreciate the invitation. And I always enjoy chatting with you about the markets. I like the way you see things. I like the way you try to keep things simple. I agree with that wholeheartedly, that all things being equal, simple and wider tends to be better. And the other thing I really like about your approach, you're humble about it. You're willing to change your opinion if you need to change your opinion. And by the way, if you got anyone's out there's new to this, maximum flexibility. If you're not willing to change your opinion and you're not willing to take your ego and stomp it on the floor, you're never going to make it.
Yeah. And it's a testament to you. You've been at this 30 years. I've been at this a little over 20 years. If you want to last a long time, my advice is be open-minded. And if you're not open-minded, the market is going to remind you real quick as to why you need to be open-minded.
Amen, brother. It really does.
There's
the fact that you're around this long, it says something. There's not a lot of people that make it this long in this business.
Yep. Good.
All right, gentlemen. Thank you so much for having me on. And I will not hesitate to come back on. And I appreciate the invite. And hopefully when we're here next time, we're talking about at some point the Rangers and their Stanley Cup victory, and not talking about the Knicks. We'll be talking.
Dude, you're coming up to New York. We're getting mutton at Keen's before the game. Then we're gonna go to the game, and then we'll see what happens afterwards.
I'll shut up real quick. When I first got into the business, I came up and did, I think, a 3-week stint in New York City. My hotel was right across from MSG. It was 1994, right after the Rangers won the Cup.
Wow.
And it was just a very, very good time for hockey. And I think it would be good for hockey if the Rangers won again.
Yeah, that 7th, 8th Avenue in the West 30s is lovely this time of year. It's got that stench, that sweat and grime, you
think it's bad now. It was still turning back then. Times Square was a different animal in 1994.
The worst place on earth where MSG is.
It was a different animal.
Go Rangers.
All right, boys. Thanks for having me on. Chris. Enjoy the rest of your day. Spencer, thanks for setting.
Oh, sorry about that. Cut you off, Chris. Sorry about that.
Man. What do you think about that, Mr. Strazza? He's the man.
He's great. I love his emphasis on secular trends and secular tailwinds like demographics. He really has a great way of viewing markets and zooming out to do so.
Also, keep in mind what he does for a living, right? He's managing retirement accounts. So that's what he should be doing. I mean, I don't tell people what to do, but I just want to give him kudos because he is doing for his customers what I think he should be doing, right? Looking at those longer term charts, looking at those bigger trends. Good on him.
And not every day you hear the words JC and humble in the same sentence. That was a nice compliment.
Well, what I was going to say is that there's a balance, right, between being willing to change your mind and also being convicted. And it's a tug of war. It's a constant tug of war. JC is fighting it.
Yeah, I mean, listen, I come off as confident and cocky because I back up my sentences with facts. Because I only look at facts, so it's hard to argue with me. And I have my opinions, and you know very well that I'm happy to change my opinions when the data suggests so. But if the overwhelming amount of evidence points to something, I'm going to make the argument that I think is right. And I might be loud and boisterous at times, but that doesn't change the fact that if the data suggests that we need to be buying small caps, it doesn't matter that I've been making fun of small caps all year. I'm going to be buying small caps.
Someone called you dogmatic on the interweb the other day. Did you see that? Crazy.
Yeah, but anybody who knows me knows that's not true.
Good word.
Dogmatic.
Yeah,
Great
dogmatic is like laser eye people, like Peter Schiff with his gold and things, like people that are just like, it's like a religion, you know? Yeah, if anything, I'm dogmatic about the fact that price is the only thing that pays us. And I'm okay with that because that is just true.
Dogmatic about making money.
I'm dogmatic about making money. I'm dogmatic about keeping an open mind, right? Letting the data prove to me that now it's time, right? Right?
Yeah.
Like when they were telling me 3 months ago that small cap breadth was improving, I was laughing at those people because I actually took the time to count. Now, at some point, small cap breadth is going to be improving. I can argue that small cap breadth is slightly improving now, finally. Right? Keep an open mind. Right?
I things are improving big time just this week, I think. Is that fair to say? Would you agree with that?
I mean, listen, small caps at the index level have a lot of work to do, but I'll tell you this much. This entire time that these small cap indexes have sucked, we have consistently found monster winners in the small cap and mid cap space.
Yeah.
So if we've learned anything, and I think that we already knew this, us three going into this year, it reiterates it further. And if you're new to this, it reiterates even further that even if the small cap indexes suck, you're almost always going to be finding opportunities from the long side in small cap stocks, despite what the small cap indexes are doing. No?
Absolutely. It's a large universe.
Yeah.
It's the largest that we have. So, yes. And that's been the case for a long time now, this whole cycle. Small cap industrials have been great the whole time.
Yes.
Hey, don't look now. Capital markets ripping higher, breaking out above the prior cycle highs.
By don't look now, we look at them every day and talk about it here every day.
The banks look good, my friend.
Why don't we do a quick little rundown and we'll do some hot corner. Dow futures up 200 points this morning. That's about 50 basis points. Can we see 40,000? Do we see 40,000? When do we see 50,000? Russell 2000 up almost a full % this morning. S&P futures up almost 30 handles, pushing 5,300 for the S&P 500. NASDAQ 100 up 100 points. That's 50 basis points. Gold up 1/3%. Silver up 1.5% above 29. Copper down 50 basis points. Crude oil down 1% and change, down towards 77. Dollar down, rates down, bonds up. That's the way we like to talk about markets.
Nice.
Okay.
Listen, throw up my Bitcoin chart.
Your
Big move
Bitcoin
from
chart.
Bitcoin here so far this morning. What do you think? Is this the right way to draw it up? One of Bitcoin's best day of the year, best days of the year.
Yeah.
You need to see 72. Let me guess.
It's messy, man.
You need to see 72. JC is not convinced.
It's messy, dude. I mean, you could trade it against those lows all day long. You've talked about 60,000 a million times. I've agreed with you.
All right.
I've agreed with you. If you want to trade it against 60, knock yourself out.
But have you thought more about it? Wouldn't it make sense in the week that GameStop's up 100% back-to-back days, that Bitcoin finally tries to make some sort of resolution here? You don't think those two things happening together make sense?
No.
Bullshit.
You asked my opinion. I'm giving you my opinion. I don't think one has anything to do with the other.
Animal spirits.
I don't think so. I don't think so. I think his short's getting squeezed, bro. What does that have to do with Bitcoin? You know what I'm saying? Like, you know,
I think you guys are kind of
squeezed.
I
I don't know why we
thing.
need to be like, oh, animal spirits, Bitcoin go up. You know, like I don't know. Me know that not real money.
So good.
Strazza, for whatever it's worth, I'm with you.
You like it? You like
it? Yeah, I do.
All right. Thank you.
Well,
I don't think it's a coincidence.
Yeah.
And
also, hey, interest rates making new multi-month lows.
Now we're talking. See, now
right.
step into my office. Right now we're talking. See, now that makes sense. If rates completely fall apart here, Bitcoin line go up. Yes, I think that. I don't think the GameStop short squeeze and the Geo Bowden are driving. You know,
Pepe the Frog isn't just tipping off the market right now.
I don't think Pepe the Frog is a leading indicator here. I think Pepe the Frog is no. I don't think that's right.
It's just that if you were to build an intermarket bull market puzzle right now and put all the pieces together, it's coming together. No, dollar rates, they're squeezing them. Fine, you don't want to add that to your puzzle. Okay,
dollar and rates, yes, that I think is good for Bitcoin. Yes. GameStop squeezing. Is it bearish for the stock market that these shorts are getting squeezed? No. But what are the broader market implications from a few $1 billion here, a few $1 billion there? I think it's nothing.
You know, one of the biggest things that I want to see right now, because if you throw back up the prior cycle high checklist, I know everybody's getting sick of this. Look at how well it worked for us. What a beautiful roadmap. We got the anchored VWAP recapture shown on the far right column, right? Back above all the year-to-date high VWAPs. For the most part, there's some holdouts for sure. So what else could we look to for confirmation? One thing that's not on this list, because it doesn't look like everything else on this list, everything on this list was back at or very close to prior cycle highs in 2021, early 2022. Small caps are not. That's why they're not here. We're above 200 in the IWM 2000 and the Russell 2000. We haven't had an overbought momentum reading, Spencer, in guess how long? Russell 2000.
In the Russell 2000?
Last time momentum was overbought.
Oh, God. I don't know. 2-3 years?
No. It's a bull market. So it was overbought late last year, around
last
Christmas.
year? All right.
But unlike S&P, which was overbought a ton in the first quarter, and all the other indexes and sector indexes, not overbought, not confirming the new highs with an overbought reading. I want to see that from the Russell 2000, and I also want to see it across the board. All of these, right? Let's confirm these new highs even more. Let's get some overbought momentum readings. I think we're heading there. If you look at something like NASDAQ 100, we're at RSI 64, right? We're not far.
Was there anything in the out of corner today? I know we had a couple earnings. They were smaller. Not super important to the market.
We got some charts.
You got some charts? All right. Let's do hot corner, and then we'll bring on Mary.
Great.
So hot right now.
Shift 4 payments. What a mess this chart is. Always pay attention when I see the chairman and CEO buying. What are you laughing at?
What am I laughing at?
Yeah.
What a mess it is.
Yeah.
And like how you lead off with that. Like, yo, this dude
just
dropped 5.7 milli on this mess.
How much
if you don't find the comedy in that, I just think that you're just not a happy person. That's hilarious.
Well, isn't that what you want, though?
Who? Me personally, or him?
The pejorative view. You want to see the chairman coming in and defending.
Yeah, but just because he wants to get chopped up in this mess doesn't mean we do.
Yeah, that's also true.
Better question. How much should a company founder, this is a $4 billion, $5 billion little mid-cap software stock, right? Probably was a startup not long ago. How much should the founder own? The founder and CEO, chairman.
How much should the founder own?
I would expect them to own a material amount of shares, no?
Depends.
Yeah. I thought you meant like, is there a maximum that they should own? No, they should own a lot. Yeah.
how much is enough?
I don't
Oh,
think
gosh.
it's fair to just blanket it like that. It's different every time, dude.
I don't know. Definitely double digits for sure. Like,
But JC, is there a floor? Like Spencer's saying at least 10%. That's pretty high.
25?
Depends on
25%.
how big the stock is.
That's
I don't
way
know.
too high. How about you founded the company, own at least a couple percent? No?
Yes, at least. Yes.
Right? This guy owns less than 1% the outstanding shares.
This is FOUR.
Yeah, he better be buying stock. He better buy more stock. I think that's pretty embarrassing.
Stock's a mess.
It means he cashed out.
Then leave. Don't be CEO anymore. Let somebody else take care of it.
What about CEO of Akamai, 2 milli?
Nasty top there. It's retraced about 62%. It's advanced from last year's lows.
Yeah.
Doesn't look good over the short term though.
Yeah, this thing's a hot mess also. 2 milli is not nothing.
Listen, Vishay Intertechnology. I'm going to show you this chart. Tell me what it reminds you of. Small purchase. Purchase nonetheless. No, VSH.
What does this remind me of?
What does it look like?
What does this look like? It looks like Intel or Cisco, kind of, right?
Micron looked like this not long ago.
Yeah.
AMD looked like this. And you're right. You named Intel. Listen, Intel doesn't look like
Cisco looks like this now.
Intel
Intel looks like this now.
Intel doesn't look this good. Come on.
No, you're right.
What's the answer? What's the answer?
This is more of like a Cisco.
This looks like, and JC's right, maybe a laggard within its group, but this is a semiconductor.com bubble base. We've seen these so many times.
IBM was kind of like this too.
Yeah. It's old tech kind of base.
It's an old tech kind of base. That's exactly right. Yes.
And we've seen them work. We just over and over and over again, like every cycle, there's another one. Micron really comes to mind because just completed a really nice pattern that looks like this. So that stood out. Look, 25.25.
An old tech shitty company that was never able to do anything and may start to get its act together is essentially what's happening here.
That's right. And even when you zoom in, you look at a daily here, you have a much smaller base shaping up just on a year-to-date basis. So this one's interesting. It was the best looking chart of the bunch.
All right. Bring on Mary.
Let's do it. What? Why did not play?
You're fine.
What's going on? Computer. What's up here?
Good morning,
Mary
gentlemen.
in the house.
Hello, hello.
All right, I'm gonna do a little pre-roll here, guys. What I always love about Mary, Mary brings a unique perspective. She's not jaded like some of us here, who are just punch drunk and numb at this point. Mary consumes more research that All Star Charts puts out than anybody else on the planet. So when certain things stand out to Mary, I find that really, really interesting.
What stands out lately, Mary?
Oh, I've been watching the Squeezy List.
Yes.
So yeah, it's been fun. I've been putting on alerts. So you guys did the broadcast yesterday about our freshly squeezed list that runs with All Star Charts Premium. And I've been taking that list. I've been setting all these alerts for the charts that look really good. So yeah, it's been a lot of fun. I've been kind of waiting for some things to go off. Missed AMC. Oh man, you guys. So last week I had an alert set, I think around 350-ish, and it went through that on Friday. And I was like, oh, do I want to buy this? Do I not? And I chose not to because I didn't want to hold it over the weekend. So missed that one. I know Patrick.
That's okay. That's okay because managing risk is priority number one. And if you didn't feel comfortable taking that over the weekend, there's nothing wrong with that.
No, just it's that FOMO of waking up on Monday morning and seeing all the things running. I know Patrick was talking about this yesterday on the chart report Twitter Spaces and how he had GameStop calls, right, Steve? Is that?
Yeah, they expired Friday though.
Yeah, exactly. So we all have those stories, I know. So I brought a couple of charts, Hood, the Trump, XBI. You tell me what you guys want to talk about.
I like Hood, but
I like
that
Hood
was a
too.
nasty reversal last
Hood's
week.
a mess.
Oh,
A
come
mess.
on, you guys. This has been such a great trade since February when I brought it up.
You nailed it, Mary. You nailed
We
it.
were
Now
coming
looking
up
at
on
this,
that base.
a mess.
Yeah.
A mess, really? You think so?
So I got into it the day before earnings and out of it the day after. That was ugly, ugly reaction.
It was that. Well, yeah, that was unfortunate. But I added more to my position down there at that 1650, so I'm up again. And I've got that VWAP anchored from what highs are those? March.
Yeah.
And yeah, we're kind of flirting around right at that line right now. So this is one that I'm watching. Of course, obviously, with the last couple of days, it had a nice move off of the whole GameStop run as well. So, that anchored VWAP from March highs, that for me would be, if we reclaim that and keep moving on, the MACD, I like looking at the MACD. That looks like it's curling and crossing to the upside. So, yeah, we'll see. So that one's on my radar.
Momentum never got oversold, not even close.
Exactly. No, not since last fall.
18, probably confirmation at 18. So that's Mary's talking about the AVWAP drawn from the pivot high there, which is just coming in right on price right now. It's it's battling it out there.
Right there.
Week.
Yep, exactly.
All right, what else?
Yep. So I got involved in XBI. I jumped this one, and biotechs. I can't pick one biotech, so I just picked the basket.
Yeah.
We've always had this resistance drawn here around 90.95. Here on the chart is at 93. Nice little middle section there. And it was kind of just the thesis of if we are going to get going, if the most recent low is in, and we're going to kind of get bullish, and especially when the squeezy stuff started squeezing, it felt like risk on to me.
Yeah.
And so I added some XBI. Obviously, if we get above that breakout level, it was a starter position. So I'm going to be adding on strength above that, and had a nice tight stop on that one, and so far working out well up to this point.
I like what you're doing here. So you're just trying to jump this primary trend reversal, and God, are we so close? So every time we're up here, all these arrows, and we could have drawn more arrows, but it's obnoxious. Every time here, we're absorbing more and more overhead supply. August 2022 highs are shown with the first arrow. That was a big peak a few years back now. Also, you got the AVWAP drawn from the pivot highs, comes in right around the same level.
Yep.
I keep harping on interest rates, JC, but look at the way banks are trading today. These are starting to work. It's been a great week so far for biotechs. I think we're close, very close. So you'll finish your position at 93?
Yeah, absolutely. And, that was another thing that was popping up on the short squeeze was there were a ton of biotechs. And so, like I said, I can't just pick one. It's such a, shot in a fish pond, or, I don't know. But yeah, so picking the whole basket for me with XBI, especially, that just makes it feel better at night.
You don't like the twist?
Oh, I looked at the twist lately. Yes. I'm still working through the list. I'll add that to my list to look at. Let me pull up the chart.
It's had a heck of a week.
All right.
Oh, yeah, it has. Oh, yeah. That is actually a nice chart.
All right, hit that bumper, Spencer.
Yeah, Mary has a good recess, so I want to get to this.
Cool. What do you got, Mary?
So, I don't know, what your social media was like this weekend, but here in Michigan, social media blew up with the Northern Lights, Aurora Borealis, and here in Michigan,
beautiful.
We had quite a spectacular show. And so I got my kids up out of bed. My husband was like, no, I'm sleeping. So I got the kids up out of bed. It's 10 o'clock at night, and pile them in. We head to the beach, and we caught the Northern Lights. And here in Michigan, you can catch them. It's not it's rare still, but especially this far south where I am in Michigan. So this kind of display was very, very unusual. I've never in my lifetime never seen Northern Lights like this. And we saw pinks and we saw the purples, and of course green is the easiest color to see, and which you see a lot in this picture. But just 2 nights of just phenomenal northern lights. Nothing like what I've ever seen in my lifetime.
2 nights of it?
2 nights, yeah, Friday and Saturday night. And I mean, we were getting reports. Of course, the news was all over this, and we were seeing pictures of, I mean, lights in Florida. There was pictures of lights in Florida too, which
Really?
I mean, that's crazy.
That's very good.
Yeah, so it was a huge magnetic storm or something. I don't know what happened, but it was all the rage, and all my social media was just all pictures
This is
of northern
incredible.
lights.
Shout out to the Michiganders.
So that's what I got.
Yeah, Mary, they get the northern lights in the UP sometimes, right? I just missed it when I was there a couple years back. I just missed it by like an hour, but
yeah, so obviously
that's amazing.
Further north, a lot less light pollution, and of course you're further north. So UP, northern Michigan, up in Petoskey, anywhere like the second half up of Michigan, you can see them. So where I'm at, we don't typically see them because of light pollution, but every now and then you can catch a little faint green in the sky.
Want to give a big shout out to the left bank of Bordeaux. I have experimented with what is the perfect wine to go with a ribeye, and not like fancy, like with like all kinds of like stuff on it. Just a good old fashioned ribeye, right? Not with cheese or any of that. I've tried Syrah. I've tried Australian Cabernet. I've tried, Chateauneuf-du-Pape and all kinds of stuff. This is the one. It was always the one. Every time I try to veer off, I come back home. Left bank of Bordeaux. Here's a great example. Saint Julien. This is a 10-year-old vintage. Left bank Bordeaux. Period. End of story. Not right bank. Left bank specifically to go with that ribeye. I've tried. There's nothing else in this world that goes as well. Saint Julien. Shout out.
I can tell it's a good one from the bottle.
I don't know what that means.
No, it's just I'm good at it. Yeah, nice bottle of wine.
Yeah.
Oh man. All right.
When it comes to Bordeaux, I am a lefty with ribeyes. By the way, I like the right bank of Bordeaux. To be clear, this is specifically referring to ribeyes,
not fillet.
I'd rather not eat steak if you're going to put a fillet in front of me. How about that?
JC was dissing me in New York with my fillet. I love
I'd rather starve. I'd rather starve than eat a filet mignon.
All right.
I love a fillet.
Me too.
And eat it. Knock yourself out.
Oh, I will.
And you can go right bank Bordeaux if you want. You go to Pomerol or something like that.
I like a cab with my fillet.
All right. That's
Bordeaux is Cabernet.
That's a take. All right. That's definitely a take.
A Napa cab.
It's a take.
That's what I got. That's what we got here, guys. Thanks to Chris Ciovacco. Thanks to Mary. Thanks to all of you in the chat for hanging out. We got the hot corner coming up 1 o'clock Eastern time with Strazza. Come back for that. Smash the like. Go make money. We'll see you later.
Adios. Peace.
Bye, guys.
I can't take no